Most people don't think about it, but nuclear power and radioactive materials are insured just not like your car or your house. Today, we're breaking down how the nuclear insurance market is structured and why it's one of the most unique areas in the entire P&C insurance world. Let's start with the basics. Nuclear insurance provides liability and property coverage for nuclear power plants, research reactors, medical facilities using radioactive materials, and the transport and storage of nuclear waste. Sounds complicated? That's because it is. Here's the big reason why. Nuclear risks involve massive financial exposure. A single event could result in billions of dollars in damage, not just to the plant, but to surrounding communities, infrastructure, and the environment. And because these risks are so catastrophic and unpredictable, traditional insurers can't absorb them alone. That's why the nuclear insurance market is built differently, from the ground up. In the United States, most nuclear insurance is provided by a pool of insurers rather than individual companies. These pools are called nuclear insurance pools, and the biggest one here is American Nuclear Insurers, or ANI. ANI is a joint underwriting association made up of major P&C insurers that band together to provide coverage to the nuclear energy sector. Rather than one company taking on the full risk, ANI spreads it across the entire pool, sharing both premiums and losses. ANI offers both liability and property insurance for commercial nuclear power plants and related entities. It also coordinates with global nuclear insurance pools in other countries because nuclear risk doesn't respect national borders. Another key feature of the nuclear insurance market is the Price-Anderson Act. This U.S. federal law limits the liability of nuclear plant operators and ensures a fund is available in case of a major nuclear accident. If damages from an incident exceed the individual plant's insurance coverage, all other nuclear plant operators in the U.S. are required to contribute to the pool to cover the rest. This creates a backstop that ensures the public has financial protection without bankrupting any single operator. So how does underwriting work in nuclear? Well, nuclear facilities are some of the most heavily regulated operations in the country. Insurers conduct extremely detailed inspections, often using engineering experts and real-time monitoring. The goal is to assess operational safety, security, and compliance. Because there's so much on the line, there's a heavy emphasis on loss prevention and risk control. And what about claims? Fortunately, major claims are rare due to strict safety measures. But when they do happen, they're incredibly complex and require coordination between insurers, regulators, plant operators, and public officials. Looking ahead, the future of nuclear insurance is getting even more interesting. With the push toward clean energy, we're seeing growing interest in small modular reactors, called SMRs, and other advanced nuclear technologies. That creates new challenges for underwriting and pricing, since these designs haven't been tested at scale. Insurers are watching this space closely, and the nuclear insurance market will need to evolve with it. To recap, the nuclear insurance market is structured around shared risk, strict regulation, and federal backing. It's a small but critical part of the P&C insurance world, and it plays a key role in keeping the lights on safely. If you found this breakdown helpful, give us a like, hit subscribe, and follow InsurKnowledge for more in-depth explainers on the industries and coverages shaping the insurance landscape. Got a topic you want us to cover next? Drop it in the comments.